Buddy, it's Brian Shannon from AlphaTrends.net. Today is Friday. It's the 4th of May, 2018, and these markets had a pretty volatile week. The S&P had a big range, but did finish down a quarter of a percentage point, whereas the Nasdaq did bounce higher, led by the semiconductors, were close to 3%, and the Biotechs continue to be the real laggards, down 3%. So let's take a look at the action on the charts here, and starting with the daily chart of the S&P 500, we came down once again through and found support at that 200-day moving average. Earlier in the week, I had posted, I guess on Thursday morning, a chart, a point and figure chart of the S&P 500. Sometimes these charts can give you a little bit better feel for the trends. And here's a trend line from 2017. And my point was, it wouldn't be a surprise to see it come down to that 259 level. And 259 was 259.13, 259.05 was actually the low in there. So we did bounce, and we are still below a declining 50-day moving average. Keep in mind that in the calculation of the 50-day moving average, we are now averaging out data from February 22nd, which is right here, meaning that next week we'll be averaging out this data from beyond that point, meaning we would have to be above there for that 50-day moving average to catch an upward slope. We are also below the declining volume weighted average price year to date. So all in all, it means that we have continue to have mixed messages on the market, and that it remains an environment where there are some great stock ideas. We are almost through earnings season, so the majority of the big companies have reported, and we haven't really seen disasters, so that's good to see. But let's take a look at the intraday action here on a 15-minute chart, each candle representing 15 minutes. This is where we gapped higher on Monday, and the volume weighted average price for the week you can see is right here at 263.5. So based on the average price paid, I view this as a positive week for the S&P 500, despite the fact that it was down about a quarter percentage point. So next week, let's take a look at, well, and look at today's the 2-day volume weighted average price. So from the Thursday low this morning, we found buyers right at that volume weighted average price. Anyways, let's look at the 65-minute chart. The most recent trend line here off the March highs, you can see, is right overhead, as is at 268. And what would be a possible bullish scenario would be to rally up through there. I would not purchase there though, because that would be extended at that point. Instead, let the chasers buy it and then see if it can come down and do something like this, and then perhaps go make an assault on that 50-day moving average in the year-to-date volume weighted average price. The Nasdaq performing much better relatively. It's back above all these key volume weighted average price levels year-to-date, including the one anchored from the very beginning of the year. But when you look at this chart, it's still a giant mess. We have a pattern here with, yes, higher lows, and we also have lower highs. So, does this count as a higher high? Maybe, but do you want to buy a market that breaks that prior high right here at that extended level? And my point is, you certainly don't want to short it when the momentum is higher, but you don't want to be a chaser who the market just went from 161 to 164 and change. Certainly, I think you can make a better entry than that, and perhaps it looks something like this, where next week it comes back down to that year-to-date VWAP, and then perhaps it can continue to rally higher from here. We've broken the downtrend line. That's a positive that we're not seeing in the S&P 500. So the Nasdaq is being led. Obviously, Apple up at all-time highs doesn't hurt. Buying a breakout, however, at this level seems to be, testing your luck a little bit. It's just rallied from a low, last week at 161 and change, all the way up to 183. So we came down, as we were expecting, close to the volume weighted average price from this gap, and that's where we saw the bounce materialize from. So Apple, certainly a strong trend, but if you're looking for new purchases in a stock like this, I would think that you can do better here in the next few days, and perhaps, you could take a volume weighted average price off of this low and try to buy closer to that as that volume weighted average price rallies up and the market maybe comes back down to find support at it. Could be a potential scenario for Apple next week if you're looking to get long that stock. The Russell 2000 continues to hold on the weekly basis above the 50-day moving average in the year-to-date VWAP. It was pretty volatile in here this week, and the positive thing about the Russell is we still have these higher lows. We're well above the 200-day moving average there, and we have this band of resistance up in here. So what we have now, drilling down to a 30-minute time frame, these are, I do this analysis every single day for subscribers, and I draw in potential scenarios. This was a scenario I had drawn in that maybe would occur, and what we saw is that we did break beyond this resistance, so that's a positive. But again, do you want to be the buyer up here after it's just made that type of rally? Or instead, do you want to see something like this materialize and then get involved on that break? That way you could set your stop underneath whatever higher low it makes the most sense to you personally based on your individual time frame. But that's certainly a potential scenario for the Russell 2000 next week. If something like that were to happen, and then we have this 5-day moving average rising up, we make higher highs and higher lows above a flat to rising 5-day moving average, and we can define risk with a stop under a successive higher low, then it looks like a good risk reward for a move up towards the top end of the range up near 160. Semiconductors did get through that 100 level, and the volume weighted average price from the most recent move lower right over here from this peak that we saw in April, we did get above that here today, and that's where the buyers regain control. So it means from this point, the average participant, the average price was right here at about $99, and now we're back above that level. We are also above this prior band of support that we've been observing. So in here, do you want to be a buyer up here at this point, or again, would you rather see something like this materialize before you were a purchaser of the semiconductors? Keep in mind, we do have the average price this year has been declining. There's our year-to-date volume weighted average price, and we have a declining 50-day moving average as well. So you have to be extra careful about chasing moves in a market or a stock that has these negative indicators showing that money has been flowing out on balance this year. The Biotechs, again, they continue to be a disaster. They tested this low from April, and they are just a bad group to own long. Today, they came up to this prior band of support that was broken earlier in the week. That's also where we have a declining 5-day moving average, and we are, of course, below all these 10, 20, 50, 100, 150, and even the 200-day moving average is declining. When we back it out to a weekly time frame, this has been a really important level for the last 2 years. So I don't think that there's big downside in it, and I also think that it's probably not a buy with this current momentum below, coming out of it. So I think that the biotechs are really just in a void overall. XLF, the financials, they did break down through that 200-day moving average, and now they are rallying back up to this prior band of support. So if you were short in here, I think you've got to be out by this point, or at least have your stop up above this level. Up through 27.55 could squeeze the short sellers in there a little bit, and perhaps it can bounce even as high as up towards that 50-day moving average. So a lot of mixed messages in the market. But again, individual stock action continues to be strong, and there are a lot of opportunities that we've been identifying at Alpha Trends every single day. Let's talk about Bitcoin and Ethereum. Bitcoin first. This black line here is the year-to-date volume-weighted average price, and you can see how that's offering a little bit of resistance right now. If it can get through that, I think that it's likely you will find sellers from the volume weighted average price from the peak over in here, the all-time high. We saw resistance once, twice earlier this year. So if you're in Bitcoin, it's not pulling back yet. We still have these higher highs and higher lows on this daily time frame. And on Ethereum, the same thing. I was expecting, anticipating a pullback here this week. We didn't see that. that. Instead, the market blasted right through there and is now up to the year-to-date volume weighted average price, and it's above the volume weighted average price from the all-time high. So maybe we get a consolidation in here, but things are starting to look like, yes, we've had a big rally, so you certainly don't want to chase it. It's better to be on the sidelines and cash wishing you were in than to be in and or to chase it and then see a quick decline. So I would personally stay away from new purchases in here unless we saw a big shock, maybe down towards 650 or so. Let's talk about gold for a moment. It continues to be a dud here. It still needs to break beyond this 1380, 1385 level before it can gather any momentum. It's not doing that. It is still overall longer term constructive with a rising 200-day moving average, but it keeps getting rejected up in this area, and we're either going to work through that supply and break through it, or there's the possibility that we start to break down and gold completely fails from here. Hope you had a good week of trading. Thanks for tuning in.